Hey there, everyone! Welcome back to our channel. If you're new here, I'm your name, and today we're diving into a topic that's super important for anyone thinking about buying a house: down payments. So, whether you're a first-time homebuyer or just curious about the process, you're in the right place. Let's get started. Now, you might be wondering, what exactly is a good down payment for a house? Well, let's break it down together. To kick things off, let's clarify what a down payment is. Essentially, it's the initial amount of money you pay upfront when purchasing a home. This amount is subtracted from the total price of the house, and the remaining balance is what you finance with your mortgage. So, if you buy a house for £300,000 and put down £60,000, you'd be financing £240,000. The question of what constitutes a good down payment can vary quite a bit. Traditionally, the gold standard has been 20% of the home's purchase price. This means if you're buying that £300,000 home, a good down payment would be around £60,000. Why 20%? Well, putting down this amount can help you avoid private mortgage insurance, or PMI, which is an extra cost added to your monthly mortgage payment that protects the lender if you default on your loan. But let's be real. Coming up with a 20% down payment can be challenging for many people. In fact, according to the National Association of Realtors, the median down payment for first-time homebuyers has actually hovered around 7% in recent years. So, if you're feeling overwhelmed by the thought of saving up that much money, you're definitely not alone. Now, here's where things get interesting. The good down payment can also depend on your financial situation, the type of loan, and even the housing market in your area. For example, some loan programs, like FHA loans, allow for down payments as low as 3.5%. This is great news for those who might not have a large savings cushion. Let's look at a practical example. Imagine you're a first-time homebuyer looking at a £250,000 home. If you opt for a 3.5% down payment, you'd need just £8,750 upfront. On the other hand, if you decide to go for the traditional 20%, you're looking at £50,000. That's a pretty big difference. Of course, there are pros and cons to each approach. A larger down payment can lower your monthly mortgage payments and help you build equity faster. On the flip side, a smaller down payment can make homeownership more accessible, allowing you to enter the market sooner. Another factor to consider is your financial goals. If you have other priorities, like saving for retirement or paying off student loans, you might choose to put less down and keep more cash on hand. It's all about balancing your immediate needs with your long-term financial plans. Now, let's talk about some common misconceptions. A lot of people think that 20% is the only option. While it's a good benchmark, it's not a hard and fast rule. Additionally, some programs even offer down payment assistance, helping buyers cover their upfront costs. So, do your research and see what's available in your area. Another thing to keep in mind is that lenders will look at your overall financial picture, including your credit score, income, and debt-to-income ratio, when determining your mortgage eligibility. So, even if you can't put down 20%, you might still qualify for a great mortgage option. In summary, a good down payment for a house can range from 3.5% to 20%, depending on your financial situation and the type of loan you choose. The key takeaway is to find a balance that works for you and your financial goals. Remember, it's not just about the down payment, it's about making sure that home ownership fits comfortably within your budget. If you found this video helpful, please give it a thumbs up and subscribe for more content on home buying and personal finance. And don't forget to share your thoughts in the comments below. What's your down payment goal? Let's chat. Thanks for watching, and see you next time.